and let's hit it.
It's Friday, December 26, 2025, episode 281. I'm Patrick Ceresna.
And I'm Kevin Muir. This week, it's a special year-end market huddle. And man, we have a great show lined up. We were lucky enough to have a baker's dozen of previous market huddle guests come back and give us each a 10-minute interview, highlighting what surprised them in 2025 and what the market will be surprised by in 2026.
Then make sure you stick around for a fun interview session that Danny had with the guests. We learn what they really think of myself, Kevin, and the market huddle. And I guess we're going to also drink, but I'm not drinking a beer. Are you guys drinking beer?
I got a beer, so I'll start.
What do you got?
Yeah,
My best friend from Winnipeg, he moved to Sweden, but he was in Winnipeg recently, and he picked me up the Grey Cup Winnipeg Blue Bombers beer. Who knows what it's going to be like? I appreciate that. It's always good when a good pal brings the beer. So let's give it a whirl.
There you go. I'm drinking mulled wine. It's the season, and Portugal is the land of affordable wine. You can easily find a couple of euros for a bottle. So throwing that into with some seasoning and not seasoning, but like some. Not seasoning. What the fuck? Anyway, festive stuff inside, but drinking some nice hot wine is perfect for this week's episode.
How about you, Danny?
Nice. Well, today actually I've got a lovely bottle of wine here from my friend Luis from a place called Sabal, which is Portuguese for onion, and it's a natural red wine. It's lovely. I will be lovely. Today.
That was the most British thing ever. It's lovely.
It's lovely. All right, Kev, give us some side effects, buddy.
Nothing in this podcast should be viewed as investment advice. Listeners should consult an investment professional before making any decisions regarding topics mentioned in this show. Side effects of too much huddle may include the holiday liquidity hallucinations.
I suffer from those all the time.
The Santa rally dependency, and then the thin tape overconfidence. Love it.
Oh, yeah, definitely.
Right, let's get to our guests.
All right.
All right, folks, it's that time. It's the fellow who needs no introduction, but I'll give him one nonetheless. Harris Kupperman, a.k.a. Copy, one of the first guests, one of the most popular guests, actually the most popular guest of all time. Harris, thanks for coming back on the show and doing this year-end thing with us.
Hey, I'm happy to be here. Can't miss it.
Okay, so let's start with 2025. It's been quite a year, topsy-turvy, up and down, lots of different moving parts. What surprised you the most out of this past year?
I guess I'm going to take two things. One, AI is so stupid. There is no revenue. There will never be revenue. It's the stupidest bubble. It just like they're going to spend $500 billion on this thing that produces $20 billion of revenue, and there is no path to close the gap between the two. Yeah. And I'm really upset that I figured this out like 2.5 years ago. Because I would have made a ton of money just being long AI, because I like bubbles. I mean, I chased after shitcodes and Ponzi schemes and Bitcoins and all sorts of crazy stuff, but I thought this was stupider than Bitcoins, and I refused to chase after it. And it's just surprised me because it's so obvious. And just now people are starting to say, hey, wait a second, where's the profits? And you have companies like Meta, and guys are like, so there's never going to be any cash flow again because this guy is just going to build data centers on Mars and everywhere else that like anywhere you can put a data center, they're going to put a data center. I mean, if Venezuela if they don't want to get invaded, they need to build a data center like right now. Like it's safe. Once there's a data center, no one can touch it. And so like I just don't get it. Like it's so stupid. And look, this is a lot like I remember in 2016, you'd have these calls with these shale company CEOs. You'd be like, dude, stop drilling. Like, take the cash flow, pay down the debt, and then buy back stock. You guys trade like way below PDP. And then the guy from Texas is like, but if we don't drill, we can't grow. I'm like, no one wants you to grow. Like you trade, below your PDP value. Like it's not like your PDP. It's like, and the guy would be like, but then we don't grow. And it's just like, if we don't grow, then the stock's going to get hit. I'm like, have you seen your stock chart? It's been hit, it's been obliterated. Right. And these guys just kept drilling. And you beg and plead with them, stop fucking drilling. I think that's how AI is going to end. It might take another year or two, but guys are going to look at these AI companies and be like, just stop spending money. Just stop it. And it's the same thing.
Yeah, I think that first of all, in terms of catching the inflection point, I think you were spot on. And I remember you wrote that piece, and the moment you sent it to me, I was like, holy smokes, this is someone articulating the bear case in a way that actually makes sense. And I was like, we gotta get you on the show right away. We, made spot for you immediately. You came on the show, and from then on, you were just kind of like almost the poster child for the person that was screaming, this is insane. Talk to us about that experience. What it was like. Like, it wasn't, you went up and you stopped slumming it with us at the huddle and started talking to guys like Fortune and like real organizations. What was that like?
I don't know. Fame is fleeting. No one wants to talk to me again. I'm doing reruns of the huddle now.
Well done. Well played, buddy.
But look, it's weird, right? Like, I said something that no one had said before. Everyone kept focusing on how cool AI is. And look, it's really cool. I use AI all day long to research dumb stuff. I make memes. It's super cool. And it keeps getting better. And that was the whole story for 3 years. And suddenly I asked the question of, does this ever earn a return? And people are like, oh yeah, we're in the business thing. Money in, eventually money comes out, right?
Yeah.
And I'm the first person to ask the thing. And they're kind of at scale. When you spend $500 billion at stuff, you're at scale. Yeah. And once I said that, I mean, was it like 6 weeks later, McKinsey put out a report that said the exact same thing as me. They didn't give me any credit, naturally, but it's just everyone started asking the same question. That's kind of when AI topped out, because it stopped being a meme and people said, like, where's the return?
Yeah, no, you absolutely nailed it. And kudos to you, buddy. You were at the forefront of catching that wave. You were the first one. A big set of rollers came in and you were the first one to catch the wave. Do you have anything else that's surprised you for 2025 that you wanted to talk about?
I think I've just been surprised by how weak the economy has been. And the fact that you have this, like, I talk to a lot of people in the real world. I have friends who live in the real world. I feel like Wall Street people mostly talk to Wall Street people. And so if the stock market goes up, everyone's like, oh, things are good. Stocks are usually a leading indicator of next year's economy. And then you talk to real economy people and they're like, yeah, everything sucks. Like, it's comping negative. Inflation's like serious. Like, my costs are going up. Like, everyone you talk to is just like really worried. But then stocks go up. And, I think the dichotomy and divergence is Trump spent 2 weeks now tweeting about how great the economy is. And you look at the tweets and it's just hundreds of comments. And they're just like, you bozo, the economy sucks. And
Cuppy, you should really give some other people some chance to tweet in there.
Eventually the economy is AI, and I really do think that maybe next year is the year that stocks catch down to where the economy is.
Okay, so let's get on to next year, 2026. What surprises markets the most in 2026?
The economy's not detonating. It's just like a slow fade. And the slow fade continues. And eventually, I mean, it started with, really consumer-facing businesses. It's moved on to industrials and chemicals and housing. And eventually, I think enough sectors are tarnished that all you have left is basically stuff that gets government largesse, like healthcare and military industrial. And then you have AI, and the AI eventually slows a bit just because rate of change, it can't just keep doubling every 6 months what they spend on it. And eventually the wealth effect goes in reverse from the AI, and that's the last thing holding up the economy. And people start to say, hey, wait a second, stocks are really expensive. I think I don't think we crash. That's not my prediction. I think it's a lot more like the 1970s, where you have big up and down whippy moves and stocks kind of go nowhere for a very long period of time in real terms. But it starts with a down 30 year. I'm not saying we crash like a down 10% day, but I think it's more like it just doesn't go up. And if it doesn't go up, it starts to go down. That's my view.
And so you say it's like the 70s. I think the 70s, there was a period, 68 to 82, we were in a trading range and went nowhere in nominal terms. Like we in essence, I think tried to break 1,000 on the Dow, and although we kind of ticked above it, we never really broke through it, and it was there for like at least a decade. It kept bumping up against that, but in real terms, you were just kept losing money because inflation was running high. Could you see something that bad, like nominal going sideways for a decade, but inflation eating away at it?
I think that's the base case. I mean, most things are really overvalued right now. I'm amazed how many companies trade at 50, 100 times earnings. They don't grow.
Yeah, it's shocking, isn't it? Like, and
yeah, go.
I was just going to say, and it's strange companies that, like, although they're growing, they just don't seem to deserve a 50 multiple. Like Costco, terrific, fabulous company, but is it really worth a 50 multiple? Like, it's insane.
That's insane. I mean, when did Walmart get to be like a 50 multiple? It's
Yeah.
Walmart. But then you have all these other companies like Starbucks that are X growth, and they're also a 50 multiple. Like, I don't see why Starbucks deserves to be in anything. It's kind of stuck in the middle between Dunkin' Donuts at a $2 coffee and something like Panther coffee at a $10 coffee. Like, it's $7 for a crap coffee. And I don't get it. Like, I don't understand what their business case is anymore.
I just don't understand why people are willing to pay those sorts of multiples at a time when there's other alternatives.
I mean, what's happening is Mike Green is right. Dollars go in and it buys more Starbucks. And eventually dollars stop going in. I think money gets reallocated. I mean, there's a world overseas of really cheap stocks. And I think money starts going to other places.
Is that what you're doing? Spending more and more time looking for kind of bargains around the world?
Yeah, that's what I'm doing. I mean, we own more international than I've owned in a decade.
Oh, really?
But there's really cheap stuff to be had overseas, like rapidly growing businesses at single-digit multiples.
And where would you say the opportunities lay? Where do you think you foresee yourself investigating the most? Like, is it China? Is it Africa? Is it everything? Like, is the whole world growing, or do you think there's going to be better parts?
I like LATAM. About every 5 years, every 50 years, they kind of figure it out, and then they screw it up again. And I think it's their 5 years. There's been a bunch of elections already. There's a bunch more coming up in the next year. And LATAM has embraced pro-growth, I guess you call them right-of-center governments. The persistent problem in pesos is that pesos only go down. And so you need foreigners to trust the country so that they stop yanking money out. And so when you have a right-of-center government, usually the currency stabilizes, they can lower interest rates and things boom. And then the left of center guys run huge deficits and the currency falls apart. The central bank panics and jacks real rates up and the economy dies. And so you're finally going to see pro-growth. I mean, Malay is kind of the first of them. Chile in the next week or two is going to be the second of them. I think Peru and Colombia come next. And then the big enchilada is Brazil, and I have a big bet there.
Oh, that's awesome. Well, Happy, it's always a pleasure having you on the show. Why don't you tell people more where they can learn more about you, the stuff you write, just the whole kind of 9 yards.
So I got a blog at pracap.com, Pracap. I don't write too often, but when I do, I try to make them a banger. And then I'm a big fan of KEDM, KEDM.com. Go there and take a free trial. You will be impressed. We've got some new blood in there, and they've made some dramatic changes, and I think the product just keeps getting better and better.
Thanks again for being on the show, Cuppy.
Hey, happy holidays, guys.
It's our great pleasure to welcome to the show Porter Collins. He's partners with Vincent Daniel from Seawolf Capital. Porter, thanks for coming on.
All right, great to be back.
All right, so 2025, what a year it's been. What surprised you the most this year?
Well, I we're big gold bulls, but I don't think that surprised us this year. So I'm going to go with Trump's tariffs. That kind of surprised me the most. And he talked about it on his campaign a lot, but I think the way he handled it, and with the Office Depot 3M board up there talking with random numbers, and you can kind of see it in the way the stocks played out. Basically everything non-AI was terrible this year, right? And the core economy, real estate, staples, chemicals, all that whole bucket of stocks were terrible this year. And so if you had anything AI related, it was great. So think that was my. No, I wasn't surprised by AI, but I was more surprised about how Trump handled the tariffs, the uncertainty around it, and you can really see in the ADP numbers, right? They just they're the ADP employment numbers, they're terrible, and so I think that's what surprised me the most.
So, like that brings me on to the K-shaped economy. Do you see any hope for that getting better? And how does that resolve itself?
Well, how about I lead myself? You led the witness here. How about I lead myself into the if I'm surprised by anything in 26?
Okay, yeah. So we'll go to so we'll work it in there. So in
Yeah.
2026, what do you think the market will be surprised by the most?
Well, I don't know if this is a surprise, but if you got to go through, we've been going through the last couple of days, going through the one beautiful bill,
Oh, yeah.
and thinking about the midterms are at the end of the year, and the one beautiful bill was designed to have a lot of front half stimulus,
Right.
and to really turbocharge the economy. And so, if you kind of look through, this year's winners of what worked, Warner Brothers in the communication services was the number one winner. It was a value stock not too long ago. It was $9 sitting around there, and it ripped. Google in the tech space was a value stock. In financials, Hood at one point was a value stock. Healthcare, the winner was CVS. It was, 12 months ago, it was a value stock. In energy, this year the refiners were ripped. You couldn't give them away last year, right? You look at materials, the number one winner, Newmont, the one gold stock, Newmont Mining, ripped. You couldn't give it away, right? And so now as the clock turns, I think about Trump stimulus. Trump wants this Uber dove in the Fed. People, I don't know, they'll cut 2, 3, 4 times. We'll see. We'll worry about the consequences later. But in the bad bucket of this year was, if you go to materials, chemicals, disaster, right?
Right.
They're all at 52-week lows. If you look at real estate sector, anything that touches core real estate's been terrible. It was, data center, real estate's been good. Staples, terrible. Consumer, Lululemon, they report in the next couple of days, I think. Chipotle has been terrible. Home Depot has been terrible. The builders, terrible. And in energy, it's basically been oil that sucked, right? Oil names have been bad. In tech, tonight Adobe reports, that's at a 52-week low. So it's kind of interesting, and maybe, I'm working into a mosaic here. But if you think about what hasn't worked and what maybe can go right next year, is maybe the core economy can do a little bit better, maybe lower rates, maybe all this stimulus and the one beautiful bill. And so there's my mosaic. And so, you funny enough, the names that usually are, the huge winners are the ones people hate. Like if you look at the chemical stock, you look at, and even I look at them and I go, oh God, this is terrible. And so, that's the contrarian angle on it, at least. So there you go.
Actually, one of my smartest pals, that is just, he's always way early. He's a huge, like whale of a hedge fund guy. And he always tells me things. And at the time, nobody's talking about them and nobody cares. And he says, you should really look at blah, 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 blah. And then kind of 6 months later, I look and I'm like, geez, he's right again. And one of his big themes is he loves chemicals. And his argument is, and I'm just going to throw this out there for you, is he argues that the China anti-involution is actually going to make all these boring stocks that have been getting crushed through by Chinese competition for the past couple of decades finally shine. Do you buy that?
Yeah. The answer is yes. The question is timing.
Yeah.
If you're off by 6 months, you could be deadly wrong. So, but some of these things that they get washed out, and if you look at them on a price to sales basis, they're 0.1, 0.2, 0.3. It's kind of that's bouncing along the bottom.
Right.
Right. The EBITDA metrics are a little bit higher, obviously, because the profits aren't there, and then obviously when the profits go down, the leverage looks a little funky. But all it needs is a little bit of a switch, and you get the earnings up. Leverage doesn't look so bad anymore. A couple of these things, like we were looking at Huntsman, we were looking at Chemours, we were looking at Olin is another one. So we've been hunting and pecking around this sector. Like I said, it looks terrible. It feels terrible. And so
tough trades are always the right trades.
Like we've been talking a little bit about Adobe, right? And Adobe's earnings have actually held up fine, but it's quote unquote the AI loser.
Right.
And so it's really derated. It was probably too expensive before, but it's derated to a fairly inexpensive multiple for what it is. Now we'll see what the earnings come up with, and we'll see what Lululemon does. It's kind of interesting.
Right. All right. So I can't let you go without asking you, because you nailed the gold trade. Absolutely nailed it. Does it have another year in it? Is it going higher? Are we still, gold? Is it going to get better?
I'll ask you, have the governments become responsible? Is Elon coming back and he's going to, warm up the Doge engine again? And, so.
Okay. Well, we answered a question with another question, and we'll let our listeners decide, what you think from that.
I'll exit my gold trade when I see some responsibility coming back to governments, and that until then, it's my port in the storm. It keeps me from getting too bearish and shorting stocks, and so there you go. That's my
there we go. All right, thanks for coming on. And for those who want to get more of this great kind of insights, you guys have a Substack, you have a podcast, you have all sorts of stuff. Why don't you tell people where they can find more about you and your partner?
We do have a great new Substack with my former partner Danny Moses and Vincent Daniel. It's called What Are We Doing on Substack, and you can follow me on Twitter at SeaWolfCap.
Great, thanks again. It's our great pleasure to welcome to the show Dario Perkins, Managing Director of Global Macro at TS Lombard. Dario, thanks for coming.
It's good to be back.
Yeah, it's terrific. And this is, I know you're a big fan of year-end reviews, right? This is something you really love.
I love them. I've read them all. Yeah, I've read about 20 of these things, and they all say the same thing, that next year is going to look exactly the same as this year. And then I'm like, well, why did it take 45 pages to explain that?
Okay, so let's start with what surprised you most in 2025.
I think basically it's the resilience of the economy, because if you go back 12 months and you look at what the sell side was saying about this year, there were some really dodgy assumptions about what the new Trump administration would do. Basically, that it would do all of the things that were good for financial markets, like deregulation and tax cuts, and none of the stuff that was bad. So the tariffs wouldn't happen, the deportations wouldn't happen. That stuff was just all policy bluster. And obviously that set us up for this really nasty surprise on Liberation Day, when suddenly the consensus realized, shit, all of our assumptions were wrong. This looks bad. But actually, you look at the way sort of forecasts evolved. Everyone downgraded their forecasts after Liberation Day. And then through the second half of the year, they've had to put them back to where they were. So we sort of finished the year where we started in terms of forecasts. And I think, part of that is that businesses in the US were quite well prepared. So they had this sort of build up of inventories. But the big thing has been productivity. So I think companies have been reluctant to hire, and they sort of forced these efficiency gains on their workforce. And that's sort of offset a lot of the margin squeeze that would have come from tariffs. So it's quite a bullish story, I think.
And you don't think it's AI causing those productivity gains?
You're trying to wind me up.
I am trying to wind you up.
I don't think it's anything to do with AI. I think you had this period after the pandemic where you had these massive labor shortages. Companies were just desperate to get workers in, and they didn't really care about efficiency. And then this year, that all changed. The staff shortages were gone. They had this squeeze coming from the margins, and they basically had this fat in the system, and they took it out. And that's a sort of cyclical story. I mean, you can't continue with that indefinitely. But I think that's been I don't think there's anything to do with AI at all. Everything about AI winds me up, as you know.
And you don't think that the economic growth that we're seeing is the result of all these AI data center buildouts?
All right, you are trying to wind me up now.
Yes, I am.
So I did this chart in a note last week, and it was the contribution to GDP from AI capex and everything else. And if you look just at one quarter, so the second quarter, there was this sort of big, the AI was sort of disproportionate part of the story. But overall, there's nothing in this story. It's just not true that all of US GDP growth is being driven by AI capex. It's just this myth that's out there.
Okay. All right. So that was what surprised you most in 2025. What do you think markets will be most surprised by in 2026? Not what you'll be most surprised by. What will markets be most surprised by in 2026?
That's good, because nothing surprises me, as you know. I think that, so you look at the consensus, and as I said, I've read dozens of these reports. They're all saying next year is going to be exactly the same as this year. Everyone stop using the R word because it's too embarrassing to talk about recessions anymore, having been wrong every year. So it would sort of be fabulously ironic if the US just sank into a recession. I just don't think that's where things are going to go wrong. I think that this is about reacceleration. I think the consensus is wildly underestimating how much policy stimulus is coming in next year. We're not even talking about the Fed here. We're talking about fiscal policy in the US, which is going to turn very reflationary. I think you've got pent up demand from this year and all of those capex and hiring decisions that were postponed. The global environment is much more reflationary. People are seriously underestimating Europe. There's going to be a lot more stimulus coming out of China. All of sort of European macro analysis is basically memes now on X. It's stuff about bottle tops in Europe. And the reality is that the European economy is actually in a pretty good situation. You've got this big German fiscal boost. The consensus is underestimating what that means for the rest of Europe. And so I think we're going to get a much more reflationary environment. The economy is going to reaccelerate. I think, GDP numbers everywhere are going to seriously outperform. The issue is that they're doing this into supply problems. The labor force isn't growing anymore in the US. So you sort of think about how this plays out. Very quickly, you start to get labor shortages again in the US. The labor market starts to tighten up. You start to get wage pressures re-emerging. And then minimum, we're having a debate about, is monetary policy actually restrictive enough? Worst case, we start to actually see some inflation. And then you think, well, if the Fed isn't doing something about this, why isn't it doing something about this? What's going on at the Fed? So all of these questions about independence suddenly become a bit more relevant. And again, if you look at the distribution of forecast for next year, everybody, and there's 60 people in that Bloomberg survey, everybody expects inflation to be lower, and everyone expects interest rates to be lower. There's no outliers. So I think if you're thinking about where that's going to be wrong, I think it's reacceleration, it's reflation. For a while, that's bullish. You look into next year, this is quite a bullish environment, global economy reaccelerating. At some point, though, it becomes more toxic. And I keep talking about this analogy with the late 60s, where you had these big rate cuts in 67, economy rebounds, stock market loves it, the bond market loves it because the Fed is cutting. And then halfway through the year, it's like, shit, maybe we shouldn't be doing this. Inflation starts to reaccelerate, and then the Fed has to come back and do something about it. And at that point, things turn pretty toxic.
Does the US have a Liz Truss moment?
I don't think so. I mean, I don't think this is so much about the bond market. I think it's going to be it. I don't think it'll be about fiscal, but it could be that you start to see the reflation. The Fed is still cutting at that point. Who knows with the new Fed chair?
Right.
I think there will be this question about maybe the Fed is doing the wrong thing. Maybe the Fed isn't independent enough. And then at that point, the bond market does it for the Fed. So either way, things turn quite difficult, I think.
And does the US dollar bear the brunt?
I think so. I think that there are a lot of global investors that are quite nervous about the US. I know we've had this big rebound since Liberation Day, not so much in the dollar, but in US stocks. You can see that global investors are behaving quite differently. So hedging ratios have gone up massively. There is this continued sort of angst about the Fed and about what US policymakers are doing. And, that could turn pretty nasty pretty quickly as well if it does become clear that the Fed is not doing what it should be doing.
All right. Great stuff. Thanks for joining us, Dario. And for those who want to learn more about you and your shop, where can they go?
Best places on X or LinkedIn. I'm quite busy on there, usually taking the piss out of people and myself, but it's a good place to start, I guess.
All right, go look up Dario on X and LinkedIn. Dario Perkins from TS Lombard. Thanks for joining us. Well, it's been a while since I've had this fellow on the show, but it is Tony Greer, editor of the Navigator newsletter. Tony, thank you so much for coming back.
Kev, you're one of my favorites, man. I'm honored to be here.
You still hold the record for the Market Huddle most beers ever consumed in one session. Nobody has ever. That's gonna, live in infamy, I think.
I tell you, if anybody takes it out, I'll be back to top it again because I wasn't even feeling my best that day. And just to let you know,
I can tell you one time I wasn't feeling my best is when I came to see you. You were interviewing me for Real Vision, and then we went out afterwards, and well, we had a lot of fun, and I was was pretty messed up for a while. So
I remember leaving you off and throwing you in the cab and being like, "You gonna be okay, bud? I think we're cool, right?" And you're like, "Yeah, see you later. Let's go." And I was
all right,
but we did have fun.
We did have some fun. Okay, let's talk a little bit about markets. 2025, crazy year. What surprised you the most this year?
A couple of things, Kev. I'll say this. I will say, there a couple of things are subtle and a couple of things are kind of in your face, I suppose, about what surprised me, right? So the gold rally didn't surprise me, but the way that there is this delayed reaction flywheel now of all of a sudden, first it was gold and then platinum went berserk and everybody was like, what the hell's going on here? And by the way, why is silver not moving? Silver's 30, like nobody cared. Like while the gold rally, Bitcoin was 106, gold was exploding and silver's $35. And I was like, what is going on here? And I'm long. I don't have a silver position. I have a gold trading position, but I've got physical silver. I've got physical gold, like everybody else that's in this market paying close attention. So I am rooting for it. And I'm just noticing that it's like amazing that all of a sudden now silver's 60 bid and, things have changed. Natural gas is finally $5 bid. So I guess it's one of those things where you don't get what you want or what you expect in markets. You get what you get,
right?
You get what you get what last sale says and you deal with it, So that was kind of weird for me how that, commodities are very much an in unison trade. Maybe you could separate the grains out a little bit, but they're very much a student body right, student body left trade, or like we've been for the last 4 or 5 years, 3 years going sideways.
Yeah.
And so I feel like that if anything, we're due for that to break out. But that was surprising to me that like it was gold and some of the and still we've still got crude oil left for dead down here.
Well, that's might be the next one.
Right. So it's like one of those things where do I get long crude oil because of course it's going to go, or do I stay away from this because it's telling me that it's not going, So I have a problem. I'm wrestling with that right now.
All right.
That's kind of what, that's been the confusing part for me. And quite honestly, I thought NVIDIA was going to shit the bed at some point this year. And the buying that keeps coming back into that.
Isn't it amazing?
Oh my God, Kev, right? I mean, after the unbelievable false top, false breakout that it left on the highs based on earnings and then back down, but it gives a signal that it's going to curl over. And 2 days later, it's back in the middle of the range. And you're like, oh my God.
It's like a zombie apocalypse movie. Like they just won't die. They just keep coming at you. So do you have any theories on that?
No, I don't. I mean, I think that it might be a sign that it's actually topping, quite honest with you. I remember there being volatility like this at the highs in the .com bubble, right? Where stocks were dislocating higher, lower at the highs. And you were like, what is going on here? Like this crossfire. All I know is that it's not generating a higher NASDAQ price. Like these stocks are shooting all over the place. So maybe it's something like where it is actually a delayed reaction. Everyone knows with the bull market that NVIDIA's been in, it's going to take a long time to erode the thought process that buying the dips is not working, right?
Yes, you're right.
But time for that.
But don't you feel like a little bit that like I remember the .com and I remember Nortel here in Canada and it went up and then it collapsed and then people were buying it and trying to hope for that resumption of the rally for years, years.
Yeah. That's what it's going to look like in AI. I reckon,
Yeah.
it very much, I don't know, I hate to call tops in this because the markets are still going up, but you see the headlines of all the circuitous deals taking place, and you just got to raise an eyebrow at that and say, I mean, would they still be here if they weren't signing all these agreements with each other, which are all promulgating the same business? So that's troubling, and you want to see the outcome, but you know that it's not going to happen today or tomorrow.
Yeah, and I'm with you that was a big surprise for me as well. Not that it went up, it's just that the kind of ability to continually inflate it more and more was a big surprise for me. 2026, what do you think the market will be surprised by? Not you, but what would the market be surprised by?
So, man, when I try to think of some of the things that I've tried to look into for next year and think about what's crazy, the reality is one of the crazier things that I think about. I'm afraid that maybe the market is expecting this. So one of the things that I'm thinking about when I look at this year's leaderboard and I see gold miners up 140% year to date, that is an anomaly, right? For years, we haven't seen something like that. So I think that we've woken up the sleeping giant there. I really do. I'm very encouraged that we see Morgan Stanley coming out and saying the new portfolio, guys, it's 60-20-20, man, and you got to own gold. So I still think next year gold miners could be up 200% or 200, or 250. I'm not a valuation trader, but I know that on that kind of a metrics, they're still relatively cheap. If you compare them to technology, right? And you want to buy bargain stuff, even up 147%, 140%, they're cheaper than a lot of sectors in the S&P. So I feel like we're setting up. I feel like there's going to be another whiff of headline inflation. I think there's going to be a massive leg higher in gold. I think that's going to push gold miners up 200%, and they're going to have a better year than this year. And that is going to be, I saw something today that while I'm thinking about this and while we've got this potential for technology to back off because we know AI is in some sort of a bubble, I saw somebody post a chart today where silver versus the Dow Jones is breaking a huge, long-standing trend line. And you're like, wow, that's like exactly what I see for next year, right? I feel like the gold and precious metals and uranium and industrial miners markets, they're kind of flipping the bird at like the huge paper securities market that's been running on high for years, right? Like the technology and the derivatives and now the AI trade, and it's like high tech all the time. And the natural resources markets are going, oh yeah, you want to see who's going to perform?
Yeah.
And you look at Mag 7 and it's flat on the year, and uranium miners are up 100%,
Right.
So I think that we're in for more anomalies like that. I wouldn't be shocked to see a an uncontrollable kerfuffle in the energy space, right? Because if it's sitting here percolating down here and gold is going to keep going, and if I'm mentally expecting gold to have another leg next year, silver I'm sure is going to be higher. What was I just saying?
Oil, energy.
Oh, oil. Yeah, sorry.
Yeah, no worries.
Because I looked at the chart.
No, so that's what happens when we tape during the day.
I know. And I have risk on and I'm losing money. So that usually makes me more entertaining. So it's like you can't take your eye off the oil sector or natural gas, right? Because natural gas went from 3.5 to 5. It can go from 5 to 10 just as fast.
Oh, 100%. And the other thing I think that people have lost sight of is that these markets are tiny compared to Mag 7. And if we get a rotation, it could be huge. And I'm with you. Like, that's a great call, Tony. Like another 200% in gold miners. It's not like that's that crazy.
Right. If we see plain vanilla funds, Kev, decide to raise their allocation 50 basis points, then we're talking about that Hoover Dam through the garden hose metaphor. You know what I mean? Because there's just not enough stock to go around, and they're going to want to own them for the reason that, gold and silver are going bonkers.
Completely agree. All right. You know what? We'll let you get back to your risk on. Why don't you tell people about where they can find more about your thoughts and your great calls in terms of the Tony Greer newsletter? What's it called and where can they go?
The Navigator is found. You can go to my website, tgmacro.com. There are samples of the Navigator there. There is a guide to the other packages that I offer investors. You can follow me on Twitter at tgmacro. tgmacro.substack.com is where we post our Macro Dirt podcast with Jared Dillian.
Oh,
so
yeah,
I
that's
feel
right,
like I'm all over the place, man.
Awesome. Well, thanks a lot. Great seeing you, Tony.
Thanks for having me, Kev. You're the best.
It's our great pleasure to welcome to the show Jacob Shapiro, the Director of Geopolitical Research at Bespoke Group. Jacob, thanks for returning back.
Kevin, great to be with you. Let's do it.
Okay, so let's get to it. First, let's start with 2025. What surprised you most about what happened over the past year?
Yeah, I'm going to cheat and I'm going to give you two things. And the
Oh,
first
that's
one is
great.
larger and macro, and the second is maybe more specific. Going into 25, I was really thinking that President Trump was going to be an isolationist. And I was sort of invoking George Washington when I was talking about President Trump leading into the campaign in 24 and into November. And I thought that was going to be his impulse. And it became very clear early on in 2025 that he was not going to govern like an isolationist at all, that he was going to govern like an early 1900s style imperialist. So I felt like I had a little bit of egg on my face at the end of 24 because I was talking about him in that isolationist vein. And I pivoted very quickly to say, there's something different here. Those are both standard foreign policy traditions in the United States, by the way. It's not completely crazy. I think people react to Trump as if, this has never happened in U.S. history before. It has happened. If you've read your history from the 1880s to 1920s, President Trump would fit perfectly in that time period. So that surprised me. And I'll also say something I got wrong. Israel, not just bombing Iran, but kicking Iran's butt. It wasn't even a contest. And that follows on with Israel kicking Hamas's butt and eliminating Hezbollah. I mean, they just went from strength to strength. And I didn't know that the Israeli military had that capability in it. I didn't know that the Israeli government had the willingness to take on that level of risk to do it. I was completely surprised by what Israel did in the Middle East in 2025. And I've reset sort of my calibrations on what Israel's capable of. And I'm sure all the other different countries in the Middle East have also reset their calibrations. That might be what Israel was after in the first place. So.
Okay, great stuff. What about 2026? What do you think the market will be most surprised about when we look back a year from now?
Yeah, and I have a few here as well, and we'll see how many of these look bad next year if you'll have me back too. The first, and this is something I've been steady on this year, but I really think the USMCA, the U.S.-Mexico-Canada relationship in general, I think it's all been a soap opera. I think we get a renewed USMCA deal by the middle or towards the end of the year, and that everybody's happy.
Yeah.
And by the end of the year, we're not talking about 51st state, and we're not talking about cartels and all these other things. I think it's going to be the United States integrating more closely economically with Canada and Mexico, simply because the alternative to doing that makes no economic sense whatsoever. And President Trump is many things. I don't think he's a moron. So I think that's one thing. Another thing is I think the tables have really turned in the Russia-Ukraine war in Ukraine's favor. We've seen Ukraine use drones in the past 8 to 12 months to exact real costs on the everyday Russian citizen. You're seeing them attack energy infrastructure. You're seeing energy shortages inside of Russia. You're seeing the common person in Russia now being affected in a meaningful way. And that means that we've gone from Russia thinking of this as a grinded out conflict where they have more tanks and more shells and more people, to Ukraine saying, hey, we can drone you whenever we want, wherever we want. So you want to keep this dance up and keep on, going centimeters on the contact line in occupied Ukraine? Fine. We're going to blow up refineries and we're going to blow up highways and we're going to blow up infrastructure. And I think that will make things very, very dicey for Vladimir Putin and the Kremlin. I think they're going to have to either come to the table or face some serious populist unrest. And then the last thing, and I don't know how high confidence interval I am on this, but obviously the last year has been the year of AI.
Okay.
I don't want to go so far as to say that the AI bubble is going to pop. I think we do have to come back to earth a little bit. I'm long-term very bullish on AI, but I think we've gotten a little bit over our skis. And I think particularly in US markets, we are operating under the delusion that general artificial intelligence is just couple data centers down the road, just a couple billion down the road. We're almost there. It's coming. Right. And I just don't think that's true. And one thing I've noticed since COVID is that there seems to be a market fad every single year. And I say take this with a grain of salt for me, because this doesn't come from my geopolitics background, which is what I'm really good at. But when I'm looking at the psychology of the market, I feel like there's going to be another fad. And it feels to me like the fad that makes the most sense is robotics and automation. I think we've been talking a lot about AI in the past year and data centers, and I feel like maybe the conversation switches to, okay, and what is the actual thing that uses AI and uses these data centers and things like that to do things?
Right.
And I think maybe that's robots and automation. You've already seen that a little bit in China. I think one of the most underreported stories of 2025 was that Chinese manufacturing workers are losing their jobs not to Indians or to Ethiopians, but to robots, because the Chinese are employing industrial robots at scale in their own economy. I think, especially with immigration numbers where they're at, we're at record low border encounters, the U.S.-Mexico border. I think robotics is going to be a sexy theme for 26, but we'll see.
That's some great stuff. Now, usually we'd end it here, but while I'll have you, I think that there's, a geopolitical expert like yourself. Recently, Trump unveiled the national security strategy, and I've just finished watching the two guys from Rest is Politics, and they are losing their shit about this. Overreaction, or is this really truly a huge slap in the face of Europe, because that's how they interpreted it? And does it mean anything for markets?
Well, I don't know that it's a direct. I mean, Europe's already been slapped so many times. Are they really surprised they're going to get slapped again? If they're not expecting the slap, like, they're really behind the times. And I think you've seen that, by the way, in how Europe's operating. Like, look at Germany's defense budget and what they're talking about. They're transforming, auto factories into making tanks and shells again. Like, a chill goes down my spine every time I talk about the Germans and what they're doing in their military complex. Marco and I just did an hours long conversation about the national security strategy too, and he was a little more constructive. I'll give you my sober take, and then I'll give you my unhinged take.
Okay.
My sober take is that there are some things in the document that I actually kind of like. I like a more narrowly defined U.S. interest. I think it's good that it's recognizing that the United States cannot be all things to all people, to all nations, in all places. I think U.S. foreign policy went off the rails a little bit with the neocon delusion in the 2000s. And I think in some sense, there are parts of this document that feel like a corrective. The problem, and it's really a twofold problem, is they get that conclusion, and then they have the wrong next step, because you would think that means, okay, focus on these alliances or focus on these regions. Instead, they double down and say, and that means we need to be strong everywhere. That means we have to be the most advanced, the most strongest military. Everybody has to do what we say, because that's the only way that we're going to preserve peace through strength. And it's sort of like, okay, you finally got the diagnosis right, but you're prescribing the exact same medicine as the people who made all of these mistakes. So I have that conceptual problem. There are just parts of the document that have nothing to do with politics or ideology. I just think they're wrong, in the sense that they are misunderstanding the world. And I think if you look at the world through a mistaken lens, you are going to spit out policy that is not good. One tangible example of this, and you can make jokes about this, but it's not a joke for me. In the document, it refers to President Trump as the president of peace. And it says that he has brought peace to 9 different conflicts in the world, including Kosovo and Serbia, the DRC and Rwanda, Pakistan and India, Cambodia and Thailand, Egypt and Ethiopia, et cetera, et cetera. That's not true. President Trump did a great job, I think, in getting hostilities between Israel and Iran to come off the boil, but he hasn't done any of the things that this document says he's done as president of peace. And as you probably know, Cambodia and Thailand are taking pot shots at each other again here today on Wednesday, December 10th. And President Trump said, I have to make a phone call. Like, yeah, you have to make a phone call. And like, you can make the joke about it, but the sober take is just to say, if you're going to allow yourself to drink your own Kool-Aid, if you're going to allow yourself to believe that you are this thing, then you're going to create faulty policy. And there are a couple different moments in this document, like the president of peace line, like the line where it says, the United States produces the best manufactured goods in the world, and that countries will realize that it's a better long-term bet because the United States is the best at making these things. No, it's not. Maybe it needs to be. Maybe the strategy is that it should be, but that's China today. That's part of the problem that you're in right now. So this healing salve of self-delusion about how great we are and how we've done all these great things, to me, flies in the face of the first couple of pages, which is a really good diagnosis. And then the unhinged take, and the unhinged take really is not about the document itself. It's about, okay, we have this document, and what is the United States doing? Again, we're recording here on December 10th. What are we doing with Venezuela? Like, Iraq War 2.0 wasn't enough for us. We really think we're going to deploy an aircraft carrier and some Marines and take out a dictator, and what comes after the dictator is going to be better than before. I thought the whole point of this strategy in the first place was, look, like, we're not going to care about people's ideology. We want to work with countries that have our interests in mind, and we're going to not work with countries that don't have our interests in mind. The Maduro regime is heinous. It's authoritarian. It's barbaric. They've offered to work with us. They've offered us everything they want. They've offered, we're not going to do with China anymore. U.S. oil companies, come on in. We'll give you a front row seat. We'll even have interim elections. Like, Maduro will step aside. There'll be an interim ruler, the vice president, for 6 to 12 months, and then we'll have elections. Of course, it'll be a sham, but at least you can say that you goaded us into elections. They've given the United States everything it wants, and we're still deploying the aircraft carriers. We're shooting fishing boats in the Caribbean. And for what? That makes no sense in the context of a national security strategy that says we don't care about ideology. We can't be anything to everywhere at once. And the neocons were wrong. So you can have the best strategy in the world, and if you're ignoring it in your policy practice, who cares? And that's sort of where I'm at. If they're going to continue down this dark road with, neocon policy dressed up in America First Trumpism, then the national security strategy is not worth the paper that it's printed on. So that's my unhinged take.
That's great. It's a great take. Well, I appreciate you spending some time with us. Why don't you tell people where they can find more about you and your firm?
Yeah, bespokegroup.io is the Bespoke Group's website. I'm on Substack. You can just find Jacob Shapiro Substack. You've also got the Jacob Shapiro podcast, and I do a podcast with Marco Papic called Geopolitical Cousins. So I'm not hard to find. You Google Jacob Shapiro. I'm not related to Ben, so don't go down the Ben rabbit hole. Go down the Jacob rabbit hole. It's far superior.
Thanks a lot. Thanks for coming, Jacob. All right. It's our great pleasure to welcome to the show, as I said before, a fan favorite and one of my favorites, Director of Global Macro for StoneX, Vincent Delouard. Vincent, thanks for joining us.
Always a pleasure. Excited about this.
Exciting. Okay, so 2025, it's been quite a year, all over the map. What surprised you the most?
So I'm going to surprise you too. I'm going to go with, I've been surprised by the success of the Trump administration.
Okay, fair enough.
I thought this was going to be a train wreck. And for the first, 2 months, it looked like
it looked like a train wreck. It did look like a train wreck.
We had Doge, we had the Liberation, it shows up in the Rose Garden, and the Chat GPT formula, and just oh my god, this is gonna be fun. And now I must. I think even if I suspect you do not care much for Trump either, but we have to be somewhat objective. Right.
Trade the market you have, not the one you want.
Yeah. So growth did not, and that I was, both you and I were both saying, okay, the growth scare, but it's still, impressive that we grow like real GDP. We don't have stats because we don't, but my guess it's in around 3-4% real.
Yeah.
And then he got stuff like these crazy tariff things, like it did work. With the major exception of China, and I think maybe you can come back to that later, but if you look at the Euros, the Canadians, the Japanese, the Saudis, praise to the man. Like, he has unconventional methods, but eventually bullying worked objectively. Right. Like, he did manage and we talked. He did manage to squeeze a little bit from foreigners, which I don't think. I thought there would be much more. Because my view was always, okay, well, we have this foreign. The U.S. has all the leverage, but the foreigners have all the money.
Right.
Right. Because of the capital surplus.
Yeah.
The rest of the world has with the U.S. has with the rest of the world. So very easy for foreigners to just shut him down. It's like, okay, right. I'm going to start sending treasuries, game over. I'm start saying the stock market. And there are days it looked like that in April, but ultimately that has come to pass. Foreigners have not sold. Trump got his tariffs. And if a year ago would have been said that the U.S. would have, effective tariff rate of about 15%. I don't think people would have thought that the stock market would be where it is today, that inflation is, of course, still in inflationary stuff, but it's hasn't surged as much as one would have thought. That growth would be still fairly good. So that with the foreigners and also with the Fed, I also thought that, his insane bullying, there would be so much more institutional resistance to it.
Oh yeah.
But no, man, they fall in line. Like it's amazing. Power works. Like it really works. We are much, humans are much weaker than I gave them credit for. Same thing if you look at the universities, for example. Like, where is like, and I'm looking back at Trump 1. When we had the mass protest and this. I mean, there's a dark angle we can push that, but this, and sometimes I fear that this march towards, this is what the Duce or the great leader wants, and everybody falls in line. It's been remarkable.
Yeah, I completely agree, and I do think it's kind of amazing how much it has been successful at times. You mentioned something about you thought the foreigners have the money. I saw this article recently about how European leaders were tossing around the idea about using that power to influence the U.S. with Ukraine. Do you think that there is like a concerted effort at times to say, let's all sell the bonds? Like, do you think that that's on their table and they realize that power?
I mean, I wish, I wish, but no, I'm so beaten down on Europe and
so you don't think that they realize their
get
power?
anything done? No, I mean, theoretically, it's there. But they're really. I mean, there really is a leadership problem in Europe, and I mean, Macron is just. I mean, it's depressing, right? I mean, it's you see them with Merz, with Starmer. It's just, and I don't know if it's incompetence or that there's pressures that make them unable to. But like you saw that even in the national security strategy, that when basically which reads like a regime change plan for Europe, and there's this kind of like almost like wake up, like we keep punching you in the face and you're just not doing anything here. It's so and it goes back to one of the conversation we had about the bond market vigilantes. I think part of it comes from the apathy and the lack of confidence of foreign managers who would rather get punched in the face and stay in the U.S. capital market than take a chance on their own.
Right.
Which is
all right. So that's 2025. It surprised you. Trump's success surprised you. What does 2026 look like to you? What do you think the market will be surprised about in 2026?
It's going to be the same thing as every year. It's going to be that the imaginary recession is not going to happen. And to be honest, I feel this is one of the dumbest ones. I mean, so we had 5 years in a row, right? I mean, pretty much every year you have me in the fall on the huddle, and there is a new thing, right? Oh, so the first time we talked about it was the post-COVID hangover, like the stimulus and the fiscal impulse, blah, blah. That was crazy. The second one, the Fed is hiking too high, raised too much, and we kind of talked about how the duration argument, and that the third year was the regional banking crisis. That I will say, of all the fake recession, that was probably the most
the one that had the biggest chance of working.
Yeah, the most credible. And I think the reason it didn't happen is because the Fed kind of ring-fenced it very rapidly. And but like there could have been commercial real estate, but and then the last year was the tariffs and the IMF took down. Now this one to me is the dumbest possible one. Is how the robots and the AI are going to take all the jobs and the unemployment rate is going to surge. Like, what the I mean, can anyone point me to like a case of like significant rise, technologically driven rise in the unemployment rate in any country at any point in history? I mean, no. So I think the market is again wrong. I think the market is wrong somewhat on purpose. I think part of the reason why we see this recessionary ghost come back is because at the end of the day we want rate cuts. We are a leverage industry. Everybody wants, so we have to constantly come up with a narrative to justify for the Fed to cut, and I think that's why they're given such prominence.
I never thought about that.
Calls it out, but so yeah, the market is still wrong about the state of the economy. I don't think the labor market is collapsing. I don't think there is a monster behind the door. And on the other hand, I think where the market will be surprised is the amount of fiscal stimulus we will receive in 2026. I think there's more fiscal room than people realize. And even if there is no room, you could argue that there is no room, but Trump will take it anyway. I would argue that there is a little bit of room. Like there's probably like a couple $100 billion that we can distribute. It's an election year. This election comes with very high stakes for Trump. Like personally, he could go to jail if he loses. So the incentive, I think, is to go all in. And that means that we will get checks in the mail. My guess is we need one maybe in the spring so that you feel the effect on the economy, and then one just before the election so that the ink on the DJ Trump signature is fresh. Maybe send it with the ballot, like
here's your check along with the voting ballot
but
we filled in for you.
Yeah, and that could lead to like almost like a 2021 stock market insanity. Like we may see like meme stocks and depending on what people decide to do the checks, right? I mean, so you could argue that in 2021 it went in the stock market because the economy was closed, right? Otherwise we would have gone to like strip clubs and movie theaters and so maybe this time, and then I always go back to my inflationary style instincts. So my guess is people are maybe going to spend it more instead of bringing crypto because so that kind of repowers the inflationary machine, and that gets me to my main call for 2026, which is energy. I think that could be the market surprise is energy is the top performing sector in 2026.
All right. For those who want to learn more about great calls like this, where can they reach you, Vincent?
Twitter is the best place to go. So my handle is at Vincent, VINCENT, Deluard, DELUARD. Under my pin tweet, there is a link where we offer a free trial to my research for StoneX. I recommend that you click on it, you sign up. If there's any issue, you can DM me. I usually monitor that, and I generally I don't post frantically because I want to keep some mental sanity, but I do spend a lot of time on Twitter, and I try to get as many smart conversation. And then finally, if you're a StoneX client, reach out to your broker and ask if you can be added to my list.
Thank you very much. Great talking. All right. I'm pleased to have back my friend, Eric at YWR. Eric, thanks for joining us.
Kevin, great to be here again.
You're looking like you're somewhere different, by the way. You're not in London. Back in the good old USA?
I'm in the US this week. Yep.
Yeah. So are you, by the way, are you getting your cold snap there? We're recording this the week of December 10th. Is it cold where you are?
I'm down in North Carolina, but yesterday I was in Boston and it was surprisingly cold and made me kind of think London was pretty good. I mean, it was raining a little bit when I left, but it was, not that cold. And then I got to Boston. I was like, ooh.
All right. So let's talk about the markets. We'll start with 2025. What surprised you?
Yeah, Kevin, if you remember, end of 2024, Trump was elected and we were all super bullish about US exceptionalism and the dollar. And I thought the surprise would be that we were actually about to enter a multi-year trend of dollar weakness, that you would have dollar weakness, emerging markets, which all these asset classes which hadn't worked for years would start to work. Emerging markets, commodities, that actually the US economy would be quite strong. And the surprise, so one surprise was going to be dollar weakness, not massive crashing, but just weakness. And the second was going to be that this combination of tariffs, commodities, weak dollar, that you were probably going to get you could get a move up in the 10-year yield.
Okay.
I thought the surprise about by the end of this year, like where we are now, that we could be looking at a 5% 10-year. That the Fed, we would get nowhere. That we would not get anywhere near this 2% inflation target. Remember, at the beginning of the year, all year we've been kind of, awaiting these Fed cuts. There's always been this overhang, or not support backdrop of a Fed cutting. And I thought, if you layer on top the Fed cutting while all this is happening, a weak dollar, strong economy, commodities working, and the Fed cutting, that's the risk would be that you get the 10-year move to 5%. And that hasn't happened. And that was, I think that was a surprise for me. The dollar trend has been okay. It's happened a little bit, not much. Commodities are, gold's working, copper's starting to work, and oil hasn't. So it's been a kind of like a squishy version of what I was expecting, and it hasn't. The 10-year hasn't moved. So
the 10-year has confounded a lot of folks. I remember the point where we were worried about term premium, and now no one talks about it, and there's no worries there at all. Do you have any theories of why that is? Like why the bonds have been so well behaved? And you highlighted that you thought, inflation, we still haven't gotten to the 2% target, and yet here we are cutting. And
no one cares
4
anymore.
years, no one cares about it. So do you have a theory of why the bond market doesn't care about why term premium hasn't blown out?
I don't have a sophisticated view like you, Kevin. I was more, I was sitting there in I think it was this summer, and I was going, I think the market could rip. I think the market could do really well. But I was like, but what about the bonds? That will ruin it if the bond yields go up. And I was like, you know what? I'm worried about bonds. Everybody's worried about bonds. Everything I've read is about how bonds are going to ruin the market, and the 10-year is going to go up. And so the S&P is going to have to trade at a PE of 12. And I was like, you know what? If I know all this and everyone else out there knows this and it's not happening, there's something going on that I don't like. It's like the dog that didn't bark, right? So I said, you know what? Screw it. For some reason, which I don't get, they're not moving. And it's for some reason, it's going to be a non-issue for the moment. So that's not
that's my favorite Bruce Kaufner quote is he says, what I'm looking for is a market that is not confirming consensus. And to your point, and I think there's a lot of wisdom in your statement. You said like everyone was expecting this and it wasn't happening. So I was like, okay, so it must be there's something else going on that people don't understand. And I think
and I don't know what it
anyways, you don't need to know. I think that your next step and you being correctly bullish this whole year, I've been listening to you just kind of pound the table, being bullish, and you're still bullish. But so let's go to 2026. What do you think surprises markets next year?
I know this is so bad, but I'm going to actually say that I think that this trend is happening and that we're going to get the dollar does continue to weaken. EM outperforms, and especially bullish on China. The commodity trade has been has been filtering through. I mean, remember, gold wasn't even supposed to work, right? Gold wasn't supposed to go up because of Bitcoin. It was a boomer coin. And then platinum and palladium weren't supposed to go up because they were related to the internal combustible engine, which we don't need anymore. And then copper wasn't going to go up because of the Chinese property market. So all these things like dominoes have gone. Natural gas is working now, and that wasn't supposed to go up because we had all this natural gas we don't need, and now there's an AI boom. And so the last one standing is oil, which everyone has, and it has confounded me, and it's been a bad call from last year as well. But anyways, so I think the commodity trend, I think oil joins the commodity boom, and I think I do think there's going to have to be some reaction to the 10-year in 2026. So
you're gonna go and kick that football, right? Like Lucy's got the football and you're gonna kick it.
Yeah, I'll go for it. But it's good. I mean, it's still like stuff's working. I think that Hang Seng market will go up 20% this year. I think the Chinese stock market will be the big, I think it will be a positive surprise for everyone. No one's talked about it this year. It was up 30%, but lots of things have done well. But I think when it happens again next year, people go, whoa, this is starting to turn into a big trend.
That is awesome. All right. And you, as I have said, you have been really, really spot on with your bullishness this whole year. For those who want to learn more about your process, about, all your terrific calls, where do they, reach out to you?
I'm on Substack, but the domain is www.trump ywr.world. It's so YWR is for your weekend reading, and .world because we like to talk about the whole world.
Awesome. Thanks for joining us today, Eric.
Thanks, Kevin.
Hey guys, just jumping on here. I hope you've been enjoying the Christmas special so far. But make sure you stick around because we have part 2 coming up. In part 2, we have more guests and we have a blooper reel at the end where I ask all of the guests some very, very uncomfortable questions. Stick around because we'll be releasing this tomorrow, Saturday, December 27th. Make sure you stick around. Part 2 coming tomorrow.